Hey guys, how's it going? This clip is finally part 3 of 3. We're actually going to compare programs. We already talked about how scores affect rates. We also talked about how scores affect conventional mortgage insurance costs, assuming that you have less than 20% down. We also talked about how some banks and large lenders overcharge buyers on FHA rates, and how you can use the state of Maryland MM program preferred rates as a rate compare tool, as long as your scores are at least 660. That's the minimum required by the state. We've seen so many graphs of what conventional loans look like without mortgage insurance, with mortgage insurance, at lower rates, higher rates. So let's look at an FHA loan on the graph, the blue line. As always, our baseline that we're comparing against is a loan with no mortgage insurance at the rate a person with great credit will get. Our sale price in this example is $200,000 and 5% down is $190,000. Making the down payment the same for all loans is important so we can compare apples to apples. The first thing we notice on the left-hand side is that the starting point is higher. Well, how come? Because FHA charged 1.75% of the loan amount at closing. So starting at day one, the FHA costs are higher. The second thing to note is that there's no break in the line showing that the mortgage insurance went away. Unlike conventional mortgage insurance that someday goes away after the loan balance drops enough, the FHA mortgage insurance doesn't stop, but it does decline. So instead, it shows up as a smooth curve. Then, finally, the rate on both plans is the same 4%, which, looking at it, makes FHA look like a terrible deal. But wait a minute, we already said that FHA rates should be 0.5% less than conventional rates. So let's fix that. The blue line shifts down to the red line. That is 0.5% rate difference for the FHA versus conventional. Then let's add in a 5% down conventional loan to a buyer with relatively decent 680 scores. And here it is. It's the red line, and it don't look so good against the adjusted FHA blue line. FHA is clearly better. How about a loan to a conventional buyer with a 700 score? There's the 700 score. It's the green line, and the purple FHA line is still better. Take a look. Once we get to a 720 score or better, the math shows that the conventional loan is clearly a better deal when you're putting 5% down. Under 700, clearly FHA. From 700 to 719, probably FHA. But let's see if we can boost your scores first. More on that in another video. If you have questions, you can call or text me at 443-829-2210. Email for this is scott@scotthelp.com. Thanks for watching.